Welcome back to Investing Talk podcast. We're glad you're joining us today for an analysis of a company that's, well, it's been generating quite a bit of attention recently. We're talking about Evoke Pharma. And the central question we're dissecting today is one that's definitely on many investors' minds. Is Evoke Pharma a good time to buy now? We've sifted through the latest reports, financial data, market sentiment, all of it, really, to bring you the clearest picture possible. Now, before we get into the details, if you find this discussion valuable, please take just a moment to hit that subscribe button, like this analysis, and maybe leave a comment. Your support truly helps us bring these insights to more listeners like you. And if you're feeling extra supportive, well, you could consider buying us a coffee. The link's below. Also, very important, if there's a specific company you'd like us to look into next, please leave its name in the comments. We genuinely love hearing from you and, shaping our content around your interests. Okay, let's unpack this Evoke Pharma situation. Recent news has certainly put them right in the spotlight. Something specific in the regulatory world has got people talking, hasn't it?
Yeah, absolutely. What's truly fascinating here, and kind of the catalyst for a lot of this buzz, is the recent listing of a patent for their Emote nasal spray. It's listed in the FDA Orange Book.
Okay, the Orange Book, for listeners maybe not familiar.
Right, so the Orange Book is basically the FDA's official list. It has approved drug products and, crucially, their associated patents. Getting listed there isn't just, some minor paperwork update. It's a big strategic move. It essentially grants them an extension of market exclusivity, gives them a longer runway, protected for their key product, without facing direct generic competition right away. And for a biotech, especially a smaller one, was huge.
Yeah, okay, so that patent extension really threw a match on the kindling, didn't it? Especially around speculation of a potential short squeeze. I've seen that mentioned a lot. Given the relatively low number of shares available for trading the low float and what some are calling positive fundamental shifts, well, you can see why that buzz started. But it seems not everyone's convinced this is just a straight shot up, are they? Some traders sound quite skeptical, maybe expecting a pullback after this run.
You really hit on the core attention there. While, yeah, that bullish sentiment is definitely fueled by the patent protection and also that tantalizing possibility, of an acquisition by a bigger pharma company looking to expand its pipeline. That's always in the background for biotech. But it's absolutely crucial to remember, with news like this, there's almost always a significant divide in how the market reacts.
Right.
So for every investor seeing a clear path up, there's another one scrutinizing the underlying financial health. They're asking if the current valuation really reflects sustainable growth. And that low float you mentioned, while it can fuel a short squeeze, it also means much higher volatility. Moves can be really dramatic up or down, which definitely increases the risk.
That's a vital distinction. Volatility cuts both ways.
Okay, so we've got this exciting patent news making waves, but let's dig a bit deeper, beyond the headlines. What's genuinely driving this company? When we look at their recent performance, particularly the revenue, well, the growth is quite significant, isn't it?
It really is.
For Q2 2025, revenue hit $3.75 million. That's up quite a bit from $2.55 million the year before. And for the full year 2024, revenue basically jumped, 97.8% to $10.25 million. Those are genuinely impressive growth figures.
Yeah, those numbers certainly paint a picture of strong commercial momentum. It really indicates their main product, Emote, is gaining real traction out there. And the projections, they even suggest maybe another 60% sales jump for the full fiscal year 2025.
Wow, 60% more. Yeah, and it seems largely supported by, growing prescriptions for Emote, plus they're expanding into new pharmacy networks. It suggests they're effectively getting into their target market, and doctors are increasingly adopting the therapy. That's a critical milestone for any pharma company, particularly a smaller one, showing the product can actually generate meaningful sales.
Okay, so established trajectory for top-line growth. That's exciting for any biotech, right? But, and there's always a but, isn't there? Revenue doesn't automatically mean success. What about further down the balance sheet? And this is where it gets, well, maybe a bit more complex. Despite this really significant revenue growth, the company is still unprofitable.
That's the catch.
We're looking at a net loss, about negative $5.38 million for the trailing 12 months. Cash flow is still negative, although to be fair, they have shown some improvement, narrowing those losses a bit.
Right. And this immediately brings up that important question about sustainability. How long can a company keep growing like this without actually making a profit? Now, their cost management efforts seem to be helping, leading to a reduced EPS loss, which is good, but the financial structure still needs a really close look. As of August 2025, their market cap, the total value of their shares, is around $12.17 million. But interestingly, their enterprise value is lower, at $5.24 million.
Enterprise value lower than market cap. What does that signal to investors?
Well, an enterprise value that's lower than the market cap, especially for an unprofitable company, is often a critical signal. It usually means that when you factor in their debt and cash, the market sees the actual operational assets of the company as having less value than its equity value suggests. It can hint at significant liabilities or maybe a pretty rapid cash burn rate that the market is very aware of, even with that nice revenue growth. It's definitely a key indicator of underlying financial stress. It suggests the market is valuing the company more on its future potential rather than its current assets.
That's a really powerful distinction for our listeners. Top-line growth isn't the whole story. Okay, switching gears slightly, let's talk competition. Evoke Pharma operates in a pretty specialized niche, doesn't it? Gastroenterological drugs, specifically Gimodi for diabetic gastroparesis. It's a focused area.
Very focused.
So, who are they up against? Are there big biopharma players in this space, directly or indirectly? And how does Gimodi really carve out its space beyond just having those positive study results?
Yeah, that's always the million-dollar question for a niche player, isn't it? While there isn't like a direct blockbuster competitor with the exact same nasal spray for gastroparesis, they're definitely not operating in a vacuum. They're competing for doctors' attention against established oral GI meds, maybe some off-label uses of other drugs, and potentially future drugs coming down the pipeline from bigger pharma companies. Think players like Takeda, AbbVie, AstraZeneca, companies with broad GI portfolios and R&D muscle.
Right, the big guys.
But Gimodi's key difference is that nasal spray delivery. That's really crucial, especially for patients with diabetic gastroparesis who often have severe nausea, vomiting, makes taking pills incredibly difficult, sometimes impossible. So the fact that Gimodi bypasses the stomach, essentially, is a huge advantage. And that's where those positive studies really matter, demonstrating it works and helps capture share in this specific kind of underserved patient group. It's not just positive studies, it's a specific solution for a real unmet need.
Okay, so that unique delivery method is a significant edge. It lets them stand out even against bigger players. Makes sense. Let's move on to valuation metrics then. For our listener trying to understand the price side of things, what do the numbers tell us when we try to value Evoke Pharma?
Well, like you said, they're unprofitable right now, so the traditional PE ratio, price earnings, doesn't really apply. It's meaningless. But we can look at the price-sales ratio, the PS ratio, and that's approximately 0.95.
0.95.
Yeah. You get that. Taking their market cap, the $12.17 million, divided by their trailing 12-month revenue of about $12.79 million. And for a biotech company, a PS ratio that low, well, it's quite striking.
Under 1. That seems really low, especially given the revenue growth we just talked about.
It does, and it often reflects significant market skepticism. Maybe about long-term profitability, or maybe the sustainability of that revenue, or just the inherent risks in their product pipeline. The market is clearly hesitant about something.
So that low PS, it almost feels contradictory, right, with that impressive growth. Does it suggest it could be undervalued if you just look at the sales momentum? Or is the market just rightly focused on the profitability issues?
That's exactly the dilemma. Looking at the bigger picture, you could argue that compared to its revenue growth alone, the company appears undervalued. But this is precisely where that speculative label becomes so critical. The market is obviously discounting those sales heavily because of the continued losses and, the general risk of the biotech sector. Also, the lack of published discounted cash flow analyses or DCF models.
Right. Those are common for more established companies.
Exactly. Their absence is common for smaller, high-risk biotechs still growing, but it adds to the speculative feel. There's no clear intrinsic value model for the market to really anchor to. Investors are essentially betting on future events' continued growth, maybe profitability down the road, or that acquisition not on proven current financial stability.
Okay, that puts the valuation piece into a much clearer perspective. It's a bet on the future. Now let's talk about the price action itself, the volatility. Current price swinging between, $6.06 and $7.04 intraday. Previous close, $5.83, okay? But that 52-week range, 194 cents up to $12.32. That tells a story, doesn't it? That's not just a swing, that's a financial roller coaster.
It absolutely is.
For listeners maybe newer to this kind of stock, can you just paint a picture of what that means? It's not just minor ups and downs we're talking about here.
No, not at all. Imagine riding a market wave that could literally double your money or cut it in half within months, sometimes even weeks. That 52-week range isn't just a statistic. It represents real, significant wealth creation or destruction, depending on when you bought in. This kind of volatility means even small news items or just shifts in general market mood can cause absolutely wild price swings.
So very sensitive to news.
Very. The recent spike, nearly 15% on that positive news in the revenue report, that clearly shows a bullish trend, short-term, driven by momentum. You generally see support for the stock around the $5, $6 level, with resistance maybe in the $7 and $10 range. Short-term technicals, if you looked at charts, would probably suggest it got a bit overbought after such a sharp move up. That's pretty typical for these highly volatile small caps. And its beta, which measures correlation to the market, is near zero, netting 0.04.
Which means
Technically, it suggests little correlation to the broader market. But honestly, for such a small, volatile firm, beta can be kind of skewed and less reliable. It basically just means its price moves are driven much more by company-specific news than by what the overall market is doing.
Got it. Company-specific drivers are key here. So the overall sentiment, despite that financial tightrope they're walking, seems to be leaning positive, especially because of those strong Gimodi results for gastroparesis and that Q2 revenue beat. And analysts generally seem bullish too, right? They seem to be buying into that future potential.
Yes, the sentiment right now is definitely optimistic. You've got that consensus strong buy from, I think, 11 analysts. And their average price target for 2025 is up around $16.14. So quite a bit higher than where it is now.
$16, okay.
Yeah. And that recent price jump definitely signals that optimism is floating around. Investors are reacting well to the clinical and sales news. It's important to understand why analysts might be so bullish despite the losses. They're often looking longer term. They're betting on future milestones. Maybe Gimodi gets approved for other things. Maybe that big pharma acquisition finally happens, or maybe they just finally reach profitability as sales keep climbing. And you also see positive sentiment among retail investors on social media, sometimes amplified by that short squeeze potential, which can create its own excitement loop.
Right, that retail angle is interesting too. It's clear there are a lot of moving parts here that could shape Evoke Pharma's future. So what are the key catalysts, immediate and maybe longer term, that we should really be watching for? What could move the needle?
Okay, short term. Continued prescription growth is number one. And getting broader reimbursement coverage for Gimodi. That's absolutely key. Every new pharmacy, every new doctor prescribing it builds that revenue momentum. Also, any further positive news from clinical studies would be significant, could expand how people see Gimodi's usefulness. Looking longer term, the really big potential shifts would be expanded indications for Gimodi getting it approved for conditions beyond just diabetic gastroparesis.
Wow, okay. New markets for the same drug.
Exactly. Or developing totally new products, obviously, to diversify away from just Gimodi. That would be huge. And then there's always that background possibility for a company this size. A partnership, a licensing deal, or an outright acquisition by a larger pharma company. Those are always potential game changers. They can bring in cash, validation, market reach, things that are hard for a small biotech to get on its own.
Those are definitely exciting possibilities. Lots of potential upside if things go right. But with those opportunities come risks. Pretty substantial ones, especially for our listener weighing an investment. No company, especially in biotech, is risk-free. So what are the most pressing risks here? Both stock-specific and maybe broader market ones.
You're absolutely right to focus on the risks, too. It's crucial.
Right.
The primary stock-specific risk, as we've kind of touched on, is profitability. They're still operating at a net loss. They're burning cash. That means they have to manage their cash runway very carefully. Then there's significant product risk. They rely so heavily on Gimodi. It's basically their main thing right now.
Yeah, single product focus.
Right. So if anything negative happened with Gimodi, unexpected side effects, new competition pops up, insurance decides not to cover it as well, the whole company's foundation could be really shaken. Dilution risk is also very real. With losses, they might need to sell more stock in the future to raise money. That increases the share count and can lower the value for existing shareholders. And importantly, execution risk. They just have to keep delivering on that sales growth and pharmacy expansion to meet expectations and justify that analyst optimism.
Okay, those are serious company-specific hurdles. What about the broader market, the sector itself?
Well, the biotech sector, particularly for these nano-cap stocks like Evoke, is just inherently highly volatile. That's baseline. These stocks can swing dramatically based on trial results, FDA decisions, even just shifts in investor mood towards the whole sector. Regulatory and reimbursement risks are always there for drug products. Getting approval is tough, costly, complex, and even after approval, getting good insurance coverage is absolutely vital for sales. And finally, just general market sentiment. When the market gets nervous, risk off, these smaller, unprofitable growth stocks are often the first ones people sell. Investors flee to safety, right? So Even if Evoke does everything perfectly, a big market downturn could still really hammer its share price.
Okay, so a lot to consider on the risk side too. We've covered a lot of ground then on Evoke Pharma. The exciting patent news, that impressive revenue growth, but also the profitability concerns, the valuation questions, the risks. So what's the final word? How do we synthesize all these conflicting signals for our listener who might be considering a move on this stock?
Well, pulling it all together, our analysis points to an overall assessment for Evoke Pharma, somewhere around, let's say, a 5 out of 10.
Okay, 510, right in the middle.
Yeah. It clearly shows that impressive revenue momentum and definite positive sentiment around Jumodi. Those are real strengths. However, it absolutely remains a highly speculative proposition, mainly because of the ongoing net losses, that heavy reliance on just one product, Jumodi, and just the typical high risks you see in the biotech sector, especially for these smaller market cap companies. So while analysts definitely see significant potential upside, that $16 target shows that the company's small scale, its high volatility, and that whole risk profile we discussed strongly suggest caution. This stock really seems best suited for short-term trading, specifically for investors who are experienced with speculative biotechs, understand those dynamics, and have a high tolerance for risk. It's probably not the best fit for a conservative long-term investment portfolio, mainly due to that financial instability and the ongoing losses. It's a fascinating company, great product idea, promising growth, but it demands a very specific kind of investor.
That's a really clear distinction you make there between short-term trading potential and maybe the suitability for a long-term hold. That's important for a listener. And this whole discussion, I think, raises an important question for you, our listener. How does your own risk tolerance align with a speculative stock like Evoke Pharma? And thinking ahead, what specific pieces of information would you personally want to track? What would you need to see in the coming months to either validate this potential or maybe challenge the bullish thesis? Is it continued revenue growth, a clear path to profit, or are you really just watching for that acquisition potential? Something to think about. Thank you for joining us for this analysis today. We really hope this helps you make more informed decisions. And remember, if there is a specific company you'd like us to look into for a future segment, please do leave a comment below. Until next time, happy investing.